may exhaust his questions, and he's in the room. So, okay. Senator McKim.
Thanks. I think
that was a may exhaust his questions, but Senator McKim.
Emphasis on the may there, Chair, and thank the committee. Dr. Lowe, just quickly on wages, we sort of touched on it in our previous exchange. In June, you said 3.5% is the kind of anchoring point that you'd like people to keep in mind. I presume that's still your view.
Yeah, let me just explain why I said that, because we're supposed to deliver for you an average inflation rate of roughly 2.5%, and I hope we can deliver, the country can deliver at least 1% productivity growth, as we were just discussing. So 2.5 plus 1 is 3.5. So I think that's a reasonable benchmark to keep in mind for steady state kind of growth in nominal wages. And we can vary around that from year to year, but that's a reasonable anchoring point.
So, given that, you're not forecasting inflation to get back to that mark until 2024 at the moment on your latest forecast. So what you're basically saying is that real wages need to go backwards for at least the next 2 years. Is that right?
No, I'm not saying they need to.
But on your comments,
no,
they will, won't they?
So on our central forecast, growth in labour income per hour worked is going to be probably around 4% in 2020, because there's people getting bonuses and other kind of supplements to their income. So I think it's quite likely that wage growth will pick up to 4%, and that's perfectly okay. I mean, 3.5 isn't a ceiling or a floor. It's kind of I think of that as an anchoring point, and we can vary around that. And of course, when we've got the lowest unemployment rate in 50 years, it wouldn't be surprising if we're above that anchoring point for a while. We should be.
Well, inflation's running quite a bit above that at the moment.
Yeah, but, and so let's say kind of aggregate wage growth goes to 4 and inflation comes back down to 3, then we're back in 2024 into a world of real wages growth again, which is just, we've focused a lot on wages. We share your ambition to have real wages rising and people to have jobs. They're our two kind of, that's going to make the society a much better place. If people have got jobs and their real wages are rising, so we've got a role to play in that, but I just don't want you to have the impression that we're against wages rising. We're not.
No, I guess, Dr. Lowe, we're in a situation where real wages now are where they were a decade ago. They haven't gone up at all. We had a period of very low inflation, a very low interest rate context over the last decade. Real wages are effectively exactly where they were a decade ago. The government's forecasting to go backwards again this year, and in the 4 years of the 4 out years of the budget, they're not projected to grow again. So that'll be 14 years of flatlining wages in real terms during both low inflation and high inflation scenarios. We hear a lot from you and the Reserve Bank, which I would argue is you jawboning down wages. When are you going to start jawboning down corporate profits a bit more?
Well, I don't accept your characterisation of it, because up until the pandemic, I gave lots of speeches saying wage growth is too low. We need to do something about this. I gave one speech that many speeches saying this was damaging our sense of shared prosperity, of collective prosperity, because the economy was doing well and people weren't seeing their real incomes rise, and that was damaging. So I don't accept your characterisation about how the Reserve Bank has viewed this. We're talking about this now because I want to guard against the outcome of the high inflation becoming entrenched or highly persistent, because if that happens, we're back into the world. Your very first question about how do we respond to supply shocks, and the answer to my question is, if there are second round effects from them, we raise interest rates, and that will cause unemployment to go up and a recession, and it's to lose the hard-won gains in unemployment. So I don't accept your characterisation. I share your ambition to have real wages rising.
Thank you.
Yep.
Thank you. Look, you said earlier today that you thought one of the responses to some of the supply side issues that you just mentioned and that we spoke about earlier was for an increase in the supply of gas. Later on today, you've said that managing the transition to renewables is a key issue. I mean, how do you square those two comments? And I guess, isn't the gas thing, like the issue there is the cost of gas, is not the supply of gas, not the quantity of gas supplied?
Well, price is determined by the balance of supply and demand.
Not always.
Well, you could kind of, there are other ways of coming at this, but in most cases
it's a heavily regulated market.
And I'm not, this is not my area of expertise. I was making the point earlier that electricity prices are going up a lot next year, and that is going to impact inflation. And we can do something about increasing the supply of electricity. And over the medium term, we've got to make the transition. As I said before, it's one of Australia's comparative advantages again, once we make that transition, but we've got to get there. And my concern is if the path we take to get there leads to a lot of volatility in prices, then that actually could reduce the community's acceptance of the need to make the thing. So we've got to manage the transition, and having a reasonable price of gas for a while is part of that.
Okay,
So in terms of my job, and I think kind of getting community acceptance of the transition we have to make. So there's a short term and a long term in here.
Sure. I mean, I do accept that supply and demand holds true in electricity. I actually don't accept that it does in the gas market in Australia at the moment, just for what it's worth. But can I ask you a broader question about climate change? And I mean, we're cooking the planet at the moment. There's no doubt about that at all. Do you think that monetary policy should be directed to help fund the transition to a low emission economy?
No, I don't. My job is to deliver for you an average rate of inflation of 2.5% and try and get the economy close to full employment. I set the short-term interest rate. I don't really have many other instruments, and while I don't think there's much chance of the short-term interest rate being used to kind of... So I just don't know what else...
Well, can I respond to that?
Yeah, so it'd be... Yep.
Thanks, Dr. I mean, Section 36 of the Banking Act gives the RBA power to direct loans where it is necessary or expedient to do so in the public interest. I mean, you've just printed hundreds of billions of dollars. Yeah. You've accepted that maybe that was overcooked a little bit. That's a paraphrase, not a direct quote, obviously. Are you aware of that power that you've got in Section 36 of the Banking Act, and why hasn't and won't the RBA use that power to actually direct credit into more productive sides of the economy rather than the speculative side of the economy in terms of housing prices, which was actually turbocharged by your overstimulus during the pandemic?
Yeah, well, I am aware of that provision. It's kind of one of those...
That's a tool you've got.
Well, it's a leftover provision that didn't ever get...
It's in the Act.
It did. It wasn't. When we moved to kind of the current kind of macroeconomic policy framework, and APRA became the bank supervisor, that provision was kind of left and never addressed.
Still there.
It is
Still
there. But the idea that the Reserve Bank would now start directing credit policy to kind of particular industries, that's not our job.
Who says?
Nor should it be. And then once you started that, other people have put to me that to support kind of manufacturing in the country and kind of infrastructure. So all of a sudden the Reserve Bank is here saying, well, we're going to... There's people sitting in Martin Place can direct the allocation of credit in the economy. I think that would be a backward step.
I think
that's what happens in central...
Last question.
I think it'd be tremendous, Dr. Lowe, myself, but...
That's what happens in centrally planned economies.
And
typically doesn't work out that well.
Well, might I say, Dr. Lowe, the laissez-faire approach is actually cooking the planet as we sit here today, and I think it's got a lot to answer for, and I think over time you will see centralisation of some of these things, and I think that would be actually a good thing.
Let's hope we can... deal with the planet issue without the Reserve Bank becoming responsible for credit allocation in the economy.
Okay.
Just on that, if I might, just as a last question, Chair. Dr. Lowe, I'm not sure if you've read all the submissions to the review that the that's currently underway of the RBA, but I do direct you to my submission and my suggestion that a fourth legislated objective be inserted into the Act, which is that the RBA actually play a role in responding to the climate and ecological crisis that we are currently facing.
Yes, I've seen that. It won't come as a surprise to you that I don't support it, because we've got enough to do with controlling inflation and helping full employment, and the tools that I have. While I share your kind of ambition on climate, we've got to be realistic about the tools we have. And we're doing what we can with the instruments we have. We're working with APRA on the risk assessments. We're working with ASIC on improving disclosure so the private market can do its job more effectively, and we're looking at the climate, the carbon footprint of our own operations. So we're doing what we can with the tools we have, and I think there are better ways of the society addressing this rather than the Reserve Bank kind of going in a completely different direction.
Okay, thank you. Given the time and the number of senators who I understand have questions, I'll move now to 5-minute blocks, and I'll call Senator Rennick.
Yeah, hi, how are you going, Governor? Given you've said earlier on today in your comments that there was a lot of certainty in early 2021 around 2021 around COVID,
Yep.
Why did you come out and say that you wouldn't lift interest rates to 2024 when there was so much certainty? And why should you keep your job? And in that context, who exactly are you accountable to?
A few things. We never said that we wouldn't raise rates until 2024. And that's how it's widely interpreted. What we said was that we wouldn't raise rates until inflation was sustainably in the 2 to 3% range, and given all the uncertainties, we didn't expect that to be until 2024. So it was a conditional statement. This is when we'd raise rates on this condition, and we expected this condition to be met then. So that's what we said, and I accept that people interpreted that as we wouldn't raise rates until 2024, but that's not what we said. So who are we accountable to? We're accountable to the Parliament and to the Australian people. And I'm here today as part of that accountability exercise, and go to the House Economics Committee as well, twice a year, where I answer their questions for 3 hours, as I'm doing today. So that's the accountability mechanism.
Sure,
and
just got it. I'll take that. So I've only got 5 minutes, so I need to keep going. You said also a couple of times today that the supply side should fix itself. And I know that one of the mandates of the RBA is price stability, currency stability. Ultimately, inflation is a product of supply and demand.
Yep.
And I'll just pick up on one of your most recent comments today was you're not in the business of supplying credit, you'll leave that to the private market. But yet, that's exactly what central banks do. You give credit to the banks, and in particular the Federal Reserve and the ECB, have printed trillions of dollars in the last 2 decades, and then they hand it out to the prime banks and let the prime banks spray it around. What's wrong with using that Section 36 of the Banking Act to actually let governments lend to governments and not waste money on a margin that the private banks always use? I mean, surely it's our own currency. Why are we then paying private banks that net interest margin to use our own currency, or even worse, use foreign currency and pay interest on foreign currency when we have the ability to issue credit in a responsible way? So I'm not talking about lending to private markets here or the private sector. I'm talking about government debt, so things like state debt, right? Why does the state, you take the Belt Road, for example, with the Victorian government, why do they have to borrow from China when they should be borrowing from our own central bank?
Well, there are a few issues there. The Australian governments don't borrow from the banks, so they're not paying a bank margin. They
buy bonds on...
They pay a market rate of interest.
Exactly,
on
which
the
includes a
bonds,
margin.
They have to pay interest. They pay the market rate of interest. Back to the same kind of response to Senator McKim's question, I think it would be a retrograde step for the Reserve Bank to be sitting here making decisions about allocation of funding. We could do climate change, we could do infrastructure, we could do advanced manufacturing, we could do building hospitals, and then the Reserve Bank becomes the arbiter of who gets credit in the economy. The better way of doing it is for the governments to make decisions about where they want to spend money and then to raise the money in the capital markets. Ultimately, there's no free lunch. There's no free lunch. Even if they...
No, but there is a margin. Banks have a net interest margin. I've been a treasury accountant in a bank. I know how it works. Okay, and I agree with you. It's not up to the RBA on what decisions they make. But if Parliament decides that on essential infrastructure like bridges, roads that have an asset, that is an asset that generates a return, that the RBA can lend in or issue credit within an infrastructure bank. I mean, companies go out and issue shares. They don't always go and issue new equity. They don't always go out and borrow money. Yeah. Right? If we've got an increasing population here that's increasing demand, we need to increase the volume of supply. And the 1937 Banking Royal Commission actually said central banks should control the volume of money in the system and should or have an oversight to it. And you're completely washing your hands of that. And to me, like it's absurd that a government doesn't control, it just wants to outsource money supply to foreign banks.
The Australian government doesn't outsource money supply. We control the money supply. But
you control qualitative easing.
You just think kind of the world where you kind of
So
accepted your proposition, the government wants to spend money and the Reserve Bank just gives it the money.
That's not what I'm saying.
Well, that's
not what I said.
Senator,
so please don't put words in my mouth.
Senator Rennick, there's been quite a lot in your questions, and I think the Governor is attempting to answer them, so
sure.
we might just let him give an answer for a moment.
If we were to, let's say in this hypothetical world, we would lend our government money, then we would have to charge an interest rate, and we'd charge the market interest rate. It would be the same as we were lending 10 years, we'd charge the government the 10-year bond rate. So it wouldn't lower the government's cost of financing. It would just inject the central bank into the whole process. And if we decided to lend to the government at a below market interest rate, then we're providing a subsidy. And I don't think that's appropriate. And which projects would we provide the subsidy for? It's better for the government to go to the market and to borrow. There's no way that we can provide cheaper funding in the end. It's not the job of the central bank to subsidise government finance. If you do that, you end up with inflation and resource allocation.
You're subsidising private banks.
You've got one final question.
Well, that's a bit hypocritical coming from you because you're subsidising private banks. You've just lent $188 billion to our private banks here in Australia at 0.15% and said to them, you don't have to repay it until 2024. Yep. So they are creaming it. They're creaming billions of dollars. So you're a hypocrite when you say that. Sorry,
Senator Rennick, that's not appropriate.
Okay, well, withdraw that comment.
Do you have a question?
That conflicts with what you've just said.
Do you have a question?
The question is that why do you then think it's okay to subsidise private banks? And that's what happens with the Federal Reserve. They lend out to prime banks. Yeah. Why is it okay then for the RBA to subsidise private banks and not use quantitative easing, which is what effectively central banks in other countries do? And constructive demands.
We did undertake quantitative easing. We bought a couple of $100 billion of bonds. And during the pandemic, we thought the right thing to do was to pass low cost of funding to banks so that they would pass it on to their customers.
So you're subsidising banks. That's exactly my point.
We were not involved in credit allocation at all.
And I don't think you should be.
Yeah, no, we shouldn't be. Yeah. So, we wanted during the pandemic, as part of our insurance policy, to make sure that interest rates for borrowers were as low as they could possibly be to give people extra cash flow.
So you accept you subsidise private banks?
There's no further questions.
A short period there during the pandemic, we thought that was the right thing to do.
So you can subsidise private banks, but not the taxpayer. Thank you. I'll take that as a comment. Thanks.
Thank you.